Good morning. It's Thursday, March 26th, about 6 a.m. Central Time. Overnight, the precious metals are slightly volatile. This comes ahead of a long weekend, also month end and quarter end markup. So you got to think about it like this. If you're a fund manager, you want to show that you own certain asset classes on the books coming into a month end, and also more importantly, a quarter end where you're going to write that research note out and send it out to your potential investor and also your current client base. So you want to show that you own certain assets, and you look at the quarter and year to date. You've got crude oil up 15.9%, the S&P 500 up 8.68%, NASDAQ up 7%, and gold up 5.46%. So a lot of positioning ahead of that before you get the long weekend of the note out. So three observations I do want to point out that I saw on yesterday. One, mortgage applications slipped to a 3-week low. This caused yields to quickly adjust, and that provided a small tailwind for the gold market. So early in the morning, small boost on gold. That was the reason behind it that I saw. Also, July Platinum is a contract that we've also been focusing on. The contract traded down to about $900.20, being the low. Now, I looked at the DOM trader, which you can see on your platform, which will show the number of buys that are sitting there at certain levels. And one thing that I note on Platinum is that when you get to these hold numbers, it tends to defend it quite well or come close without actually penetrating and bouncing off it. So there were several hundred buys at the 900 level which were unable to be filled. So it became close to it, but it didn't quite do it. Kind of the third observation that stood out to me was on the Bitcoin market. So Bitcoin at the 8:30 open was at 71,665. It traded within about a 40-minute window down to 68,565. So this is a pretty dramatic drop, about a $4,000 drop here. And you ask yourself, what happened? Well, what I'm seeing here is this rotation by some of these institutions. They've been holding Bitcoin futures in anticipation of the ETF and things like that. Many of these have had on the books for several months now, the futures contracts. Well, they need to get themselves and rotate out of the futures and provide for their client base the individual ETFs once they were approved. So every time you see this kind of green shoot on Bitcoin, followed by a dramatic hammer down, they will be selling the institutions, the futures on the books, and then what they do is they purchase and immediately purchase the ETF for their books. So you'll see these massive inflows come up. So yesterday, big sell-off followed by big inflow. Now, earlier this morning, precious metals were under some significant pressure. We saw silver futures down to about $24.50. Now we're, as of this recording, 25 cents higher. And then on the gold market, we were down at 22.07, looking quite weak. Now we're at 22.30. We did have Fed Governor Waller speak, and he indicated that they were in no rush to cut interest rates. He actually said no rush for individual times. He cited that there's a strong economy, that there's a strong labor market, that we've seen hotter back-to-back inflation data, and that was a reason for that sell-off, in my opinion. So now we're seeing markets come back up, and I think it also is back to that month-in, quarter-in. You want to show these asset classes on the books. Now, today it should be a volatile session with GDP, initial claims, Chicago PMI, pending home sales, University of Michigan consumer sentiment, and if you trade the agricultural markets, you'll have a planning perspectives acreage report. If you want details on that, be sure to check out the Grain Express. That's a report that one of my partners puts out. Now, looking at a few things here, I did see the euro currency. It did break to a bearish trend here in the overnight session. We'll see if it can close there. Breaking down on the charts, putting a small tailwind behind the dollar index up, while the gold market is gaining some momentum to the upside, trading right around the highs of the day. So that's quite an interesting correlation there. Also, the gold-silver ratio, taking the June basis versus the May silver, 90-1. You go down to April gold versus May silver, 89-1. So we're still getting at these upper levels here where silver looks to be quite undervalued here. Now you get to some commodity currencies that are active in the metals markets, like the Australian dollar that has broken to a neutral trend overnight. We'll see if it closes down there. And then the gold market, if you're going to trade the June basis, my opinion, or at least my own personal point where I would go back to a neutral stance is if we did get that close below 21.65 on the June contract. So about a $70 range here, a bit lower. So quite a deep stop there where it would take it to neutral trend. On the silver market, your line in the sand, look at that base here that we put on the chart. You go to the May contract, it's going to be about 24.45 is where that critical level of support, low on the overnight session 24.50. Now we do also have a laundry list and quite a lot of really important data points coming out tomorrow, so I'm kind of slightly surprised that we'll be closed. I'll be at the desk until at least probably noon here tomorrow. Jerome Powell is going to speak. You also have that important PCE data. You got any questions, give me a call, 312-858-7303. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck and good trading.